Why does the topic of saving hacks matter today in India? In this fast-paced world, where financial stress seems to be the norm rather than the exception, understanding how to save effectively can make all the difference. Many Indians believe that saving is only for the wealthy or those with extra income. This couldn't be further from the truth. Saving is a fundamental skill that everyone needs to master, regardless of their current financial situation. One common misconception is that you need to have a substantial amount of money before you can start saving. Another myth is that cutting down on expenses is the only way to save, which often leads to a cycle of deprivation and stress. The reality is that even small, consistent savings can grow over time and provide significant benefits in the long run. Let's take an example from the bustling metros where most people commute daily. Imagine you're a young professional who takes the metro every day for work. You might stop by a chai stall on your way to grab a quick cup of tea. Instead of spending 20 rupees or more each day, consider saving that money in a small but consistent manner. Now, let's dive into a full solution. The key is to automate your savings and make it a part of your regular budgeting process. Start by setting up an auto-debit from your salary account to a separate savings account every month. This could be done for as little as 500 rupees or even less, depending on what you can afford without feeling the pinch too much. For instance, if you decide to save 500 rupees per month, that's only about 16 rupees and 67 paise per day. You might not notice it at first, but over a year, this adds up to 6,000 rupees. This amount can be used for emergencies or to build a small emergency fund. Over 5 years, you could accumulate 30,000 rupees, which is enough to cover unexpected expenses like medical bills or car repairs. The psychological aspect of saving cannot be overstated. When you see your savings grow consistently, it boosts your confidence and reduces financial stress. It's also a great way to build good financial habits that can last a lifetime. The act of saving regularly can become a rewarding experience, much like how you might enjoy the satisfaction of reaching a fitness goal. Moreover, having a small but growing emergency fund can significantly reduce anxiety about future uncertainties. Knowing that you have some money set aside for unexpected expenses can alleviate stress and allow you to focus on other important aspects of life without constant financial worry. In conclusion, saving hacks are not just about finding ways to save more, they're also about changing your mindset towards money. By automating your savings and making it a regular part of your budget, you can build a solid financial foundation that will serve you well in the long run. Remember, small steps today can lead to significant benefits tomorrow. Start with something as simple as cutting down on chai every day and watch how it adds up over time. Understanding EMIs is crucial for managing personal finances, especially when it comes to buying big-ticket items like a car or a home. Essentially, an EMI stands for Equated Monthly Installment and is a fixed monthly payment that covers both the principal amount and the interest on a loan. This means that over time, as you make EMIs, your outstanding balance decreases while the portion of the installment going towards paying off the interest increases. To illustrate how EMIs work, imagine you are buying a car worth 10 lakh rupees with a down payment of 2 lakh rupees and financing the rest through an EMI. If the loan tenure is 5 years and the interest rate is 8%, your monthly EMI would be around 19,457 rupees. Initially, most of this amount goes towards paying off the interest, but as you keep making payments, a larger portion starts going towards reducing the principal. This gradual shift in the allocation of EMIs over time helps you clear the loan faster and with lower overall interest costs. Start your saving journey now, the Sarab Way.